I would put this on your radar for tomorrow. Hey everybody, hope you had a great trading day. We have a lot to go over. First and foremost, I want to go over just what's going on with Tesla. Let's take a look at this 50-day. We went up over it, we closed down over it. We have a doji. We know that these dojis are signs of uncertainty. Let this settle in. Let this figure out what it's going to do. We need to see this move, and then we need to figure out how it's going to move. Now, I want to show you one quick trading strategy. Before I get to it, please subscribe to this channel and click all notifications, because what we go over here is extremely timely and you don't want to be looking at this a couple days from now. But let me just show you this. So this is the 1 minute on Tesla. And in our trading room today, I was asked to explain why I did this trade. So I want to just walk you through a couple things very quickly here. So I came in short the stock. I did not cover the position. What I did do is I let it trade up. I tried to put more on. It stopped me out of that more. I got out of the way, and then I added again. When did I add again? Well, off the 1 minute bar, I just tried to add, and it didn't really work. So I just got out right here. So one of the things I want you to take away from this conversation is this. Just because it doesn't work the first time does not mean it's not going to work, right? Don't change your thesis. It's probably still going to work. You're probably right, depending upon how you look at technical analysis. But if your macro theme's accurate, then it's probably going to work. You just have to get back in there, get another try. So we can see here that this pops up, this popped up over. So I was asked how I called to buy puts right in here when there's technically nothing there whatsoever. I'll give you two signals, and they're kind of advanced signals, but you should be able to see this one by now. You can see how this made a higher high right here, and you can see how this made a higher low right here. And so for those that have watched that RSI video that I will link at the end, that is a negative divergence. By seeing that, you know that there is a probability that this might not hold. Now, the other thing that you can do is you can look at a move like this and realize you're dealing with a $1 trillion company. A $1 trillion company in 1 minute just went from 709 to 718. So we just moved $10 in 1 minute. Well, is that a realistic move for something like this? So what you can do is you could have average true range on the bottom of your chart. And by having average true range, this shows you what the average range should be for that specific period of time. Right? Average true range right here per minute at this particular time of the day was 280. And what did this do? 5 times that. So the chances of this move lasting and staying that way were pretty limited. So that they were two things that I looked at. The most important thing was understanding that algorithms were playing with us early. We knew it was going to be a light volume because CPI is tomorrow, and we're going to go over that next. But see how you undercut here and then flushed everybody out? That was the stop, okay? So I knew right there that they were just stop hunting, which means that they were probably going to try and pull some flim-flam like that. That's exactly what they did. It gave us a great put position or short position for stock, and then you just do whatever the heck you want with it and go from there. So now that you understand the internals, the question is, what do we do now? Well, very simple. They mapped this whole trade out for you. You have not taken out lower lows. You have not taken out higher highs. So all we've been doing since back here and hitting up here since May is we've just been basing. That's all we're doing. We're not doing anything else. So it's best to just assume that and understand that you're in a base until we start taking out lower lows. Until you start taking out like 640, 850, things like that. That's definitely something that we as a group need to look at those levels. But we need to be aware of what's going to happen tomorrow and why CPI is so important. So tomorrow what they're going to do is they're going to announce the CPI. They're going to do it at 8:30. Again, this is investing.com. I was able to blow this up a little bit cleaner. And what you're going to just see right here is this 8.8 number. If this comes in year over year, it's going to be higher than the actual number where they said we quote peak. So that's not really us peaking. So this needs to come in under 8.8 to be positive. Now this is another one you need to watch, the month over month. These are the numbers they're really going to watch. Core CPI could also be watched, but that is without energy and food, which the Fed really has very little control over, as Jay Powell has already stated. So what we have to focus on are these two numbers. This is what's going to move your market tomorrow. Okay, your market's going to be slightly down until about 8:30, down or up a little bit, until this hits. So you're going to have to be aware of these two numbers. But use this site, investing.com. It's a great site. It's free, and you can follow along with this. It gives you examples of what they are here. So you can just see, let me just close that off. So it'll give you, like, this is what it is. This is what CPI is. This will give you a chart so you can see what's going on with it. And that's really all you're looking for to get an understanding. But it's important for you to note what's going on there. It's going to be a big day tomorrow, to say the least. And that's definitely something that you're going to want to look at. Now, in regards to other names tomorrow, You might want to watch this AMC. You're coming into earnings here. The CEO has been pretty vocal that he's going to try and squeeze the short players. You can see you got to that 16-13 level. Just might want to remember that level. This is setting up nicely. Looked like it was going to go early, pulled back, and just kind of stomped around a little bit and then went higher. But I would put this one on your radar. It's definitely one that I would keep out there. In regards to some of the larger names, you saw a lot of names like Apple today run right to these levels, completely reject, and that's just because of where you're at in CPI. This is the one time where it's really very difficult to look at these technically and say that you need to do anything here. Just watch that low, because if you take that low out and you're on that resistance line, you can obviously roll, and that's something that you really need to be aware of. So some of the larger names is really where I would focus on, like the Netflix. See if it breaks that level, because you have a wedge line here. Subscriber growth is supposed to be bad. I'm currently short this. I don't see any reason to change that at all. UPST we went over yesterday. I want you to focus on this, and I want you to continue to focus on that 25.43 level. Also tomorrow, I would use SPXS to trade. This is all one big trade right now. Okay, you're still in that macro stage. You can see how you're turning here. Just take a look at this. You got to this trend line, you rejected. Really important to kind of understand where the 50-day is in regard to this. This is that bear ETF for the SPY. Look at how you're acting today. I would put this on your radar for tomorrow. I don't know how we're going to react to that number, just being blunt. And it's why I really can't give more than just macro views on what's going on out there and point out what you need to focus on. But this is definitely something that you need to focus on. I can't stress that enough. Now, in regards to that, this was a trade we did today. Let me just walk you through this so you can see it. And I don't think this is over, but I just want to, just so you can understand this, because it's really important that you know what's working here and what's not working here. And there's really nothing that in markets like this that is going to work better. There's a couple things that you can use, but there's really nothing that's going to work better than just very simple divergences, because it just tells you that the velocity, meaning the magnitude of the move, essentially is changing, right? And if you're dropping down and the magnitude of the move is going to decline, right, which this is telling you the magnitude of the move is going to decline by this positive divergence, then you know that it's going to stop going down as much as it is, which might mean that the buyers might catch up to the sellers, right? That's all it's really telling us. That's exactly what it's told us here. So this was something that we entered today, but let's go back to this so you can understand this in greater detail, because to me, I think it's really important for you to look at how wedged in you are here. Not only are you wedged in, let's open this up big time. Not only are you wedged in, but you just got back over the 50-day. And this is exactly what you want to look for, especially when you're seeing things like this. Like the VIX, this was that level we were talking about. Remember, I had the 4 arrows and said every time we break or bounce off of this, the SPY sells off. Well, look at what's going on right here, right? 1, 2, 3, 4. We broke. I thought it was over. Apparently it's not, and we're back over. And this is setting up to push. If the VIX pushes, you need to watch this tomorrow, because if you flip this 27.75 level tomorrow, we could have a problem. Now, this could just be going up. Why? Because of what we see going on with the market and people not wanting to be just have index exposure, just stock exposure. But does that look like something that's going to go up? Like that, this is the SPY. This needs to hold here, or the next level is really 372, and then you go to the bottom of the wedge line. So I'm going to give more of a macro view, and you should be looking at things like this, like the 10-year, and go, well, what's going on with the 10-year? Well, they're buying the 10-year because yield's dropping and we're below the 50-day for the first time, right? That means that they're going to be looking at buying bonds tomorrow, thinking that we're going to go into a recession. One of the things we've been playing is TLT. So that's it. I wanted to give a macro view. 2 things that you should be able to do after looking at this is start looking at RSI positive divergences. Watch this video at the end for that. And try to do very little until you see that 830 CPI number, because this market's going to change on a dime, or it has the ability to change on a dime. All right, that's all I have for tonight. Everybody, trade to win tomorrow.